the economy is slowing down in a very big way. But is that enough to make silver go skyward? The question is, does the conventional wisdom, does that say, well, worse than expected consumer sentiment, so silver should go to the moon? In other words, is there something behind the scenes that is bigger than that information, or is that information, kind of the cover to run for showing the positioning of the commercial banks in a very bullish stance? So I've been expecting this blow off, and I think it's going to continue to go higher, in my own opinion, based upon the positioning of where the most informed traders in the world are, and that is net long in futures.
The price of silver hovered around $24.01 per ounce, remaining close to the over 3-week high of $24.37 reached on August 25th, as investors awaited the release of pivotal economic data this week to corroborate the Federal Reserve's interest rate trajectory. Andy Schectman, CEO of Miles Franklin, believes that the economy is slowing down significantly, which raises the question of whether this alone is enough to cause a surge in the price of silver. He ponders whether the reported economic data covers other market dynamics, particularly regarding the positioning of commercial banks, which are taking a bullish stance. Looking back to 2011, there was still optimism about the United States economic outlook, with considerably less debt and money printing. Andy points out that the current debt growth is unprecedented, which could impact the rise of gold and silver. In the past, the Western system suppressed precious metals to support the bond market and the illusion of a strong dollar. Andy finds the current slow and methodical rise more encouraging and sustainable than previous rapid price spikes. The Silver Institute, in its report released in April 2023, states that global demand for silver rose by 18% in 2022 to a record high of 1.24 billion ounces, creating a huge supply deficit, even predicting more shortages in the years to come. Silver recorded a deficit of 237.7 million ounces in 2022, the highest supply shortage on record. The report further stated that the deficit of 237.7 million ounces and 51.1 million ounces in 2021 wiped away all the cumulative surpluses from the previous decade. Andy suggests that the disappearing silver supply from COMEX and ETFs, like SLV, and warnings about the potential difficulty in covering short positions indicate a dangerous environment for shorting silver. We will now bring you clips from Andy Schectman's interview with Arcadia Economics. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
When you look at 2011, you still had optimism in what the United States was all about. And when you talk about the growth of debt since 2011, I mean, look at the amount of debt and the amount of money printing that has happened just in the last 4 years. So I'm not saying we didn't have a substantial debt in 2011, but my guess is the national debt was probably somewhere between 17 and 20 trillion. And here we are right now with, 50% greater addition to the debt and accelerating. So the point I'm getting at is that the ability to mitigate the rise in gold and silver, which would really be the antithesis of the Western system. The Western system has suppressed gold and silver forever to support the bond market, to create the illusion of strength in a dollar and in a system that perhaps was starting to show cracks. And in 1980, it was easy to brush off. In 2011, it wasn't easy, but it was easier to brush off than it is now, where you have an increasing debt burden. And as rates rise high enough, you blow up the entire system. So they don't have those tools in their toolbox anymore. And the fact that it is slowly, methodically rising, to me, is much, much, much more encouraging than something that goes straight up to the moon in a hockey stick fashion immediately, because those runs are typically never sustained. You want to see something slow and methodical that continues to build. And to your point, which is very, very, it's articulate, and it's also, the word I'm looking for is escaping me. It's very thought-provoking as far as I'm concerned. And, it just shows that you're looking at this the right way. You're right. If you go back and look, you've never seen silver move in this way, where it continues to move higher and higher and higher and backfill and higher and higher and backfill. Typically, we see these massive spike moves. But I think it's more encouraging to see it this way. When you put into the equation that the commercial banks are now net long, now, does that mean that they'll be net long and that they won't short a rising price? That's really where the rubber meets the road, is that if the commercial banks do not short this market as it continues to move higher, then we know it's the real deal, because that's been their mantra. They're the only idiots, and they're not really idiots because they have enough money and they know what they're doing, to short a rising market. Typically, you short a falling market. Shorting a rising market tells me that they are trying to manipulate the managed money again. They've hoodwinked the managed money into going very, very, very short. And when you look at the amount of silver that is literally disappearing off of COMEX and off of SLV, when you read the ETF, BlackRock, or the SLV ETF prospectus, and look at the note that BlackRock sent out a couple of years ago, they said, hey, by the way, you know, for all of you that decide to short SLV, there could become a time where you can't get the bars to cover it. And kind of a warning in the sands, if you will. We are entering a period of time where being short in this market is incredibly dangerous. So although we are seeing it move up and up and up in a methodical fashion, there certainly is that rocket fuel there that could push it higher. But this time, the question is, will they stop it? Do they want to stop it? And even if they do, how? You can't raise rates to stop it like Volcker did. And you know, in terms of what they did to the Hunt brothers, maybe they changed the rules. I don't know. I look at it as very bullish. To me, you want slow and methodical. You want the tortoise. You don't want the hare. The hare runs out of breath and collapses like we saw in 11 and like we saw in 08. But we want a slow, steady base build that continues to build strength underneath it in an environment where physical silver is becoming impossible to get at that level. So I find it to be very encouraging, to be honest with you.
Over the past 2 days, JP Morgan has transferred 14 million ounces of silver from eligible to registered, which leaves them with just under 14 million ounces left in their eligible category after factoring in what they're holding on behalf of the SLV ETF. Andy emphasizes that the recent actions in the metal market, particularly involving JP Morgan and silver, might signify a big move. He speculates that this move might not just be about preparing the metal for sale, but could indicate that a deal has already been made for its purchase. The recent spikes in silver holdings, followed by declines, might not necessarily indicate immediate possession. It's still being determined whether these moves are tied to selling. As for SLV shares, JP Morgan has been retracting borrowable shares to ensure enough physical silver for contract deliveries. Andy suggests that the silver acquired through retracting these shares is transferred to the registered category in preparation for upcoming delivery obligations. This aligns with a delivery delay and suggests a strategic move. Let's get back to the interview.
As far as the JP Morgan shifting all of that metal into registered, I mean, it's my belief that there's probably already been a deal made. It's not that they're putting it into registered to offer it up for sale. My guess is it's already been sold. And when you deliver off of COMEX, you have to transfer it from eligible to registered. I mean, as an example, we have a Brinks program with 10 or 11 vaults all around North America. Of all of the vaults we have, the one in New York City, JFK, is a COMEX depository. Out of all of them, it's the only one that is. And I have clients in there with over 1 million ounces of silver. A few of them each have over a few million ounces in 1,000-ounce bars. Those bars are eligible, meaning they are eligible if the client decides to register them. They are eligible. They have been assayed and meet the criteria of a good delivery bar by the COMEX standards. Eligible, ain't for sale. But if they decide, hey, I want to sell it because someone's offering a big premium, maybe it's Elon Musk or whatever, hypothetically, they have to be transferred first to registered. Well, if they transfer them to registered, then they are for sale. But what if the deal was already made and they are going to take possession of this copious amount, 13, 14 million ounces of silver, some entity, a client of JP Morgan's, let's say, is going to take possession? Well, you would have to transfer it first to registered. Now, the question is it going to leave the ecosystem? If we see these bars leave the ecosystem, it fits part and parcel with what I've been saying for the last 3 years, that there are entities of great sophistication that are leaving the COMEX ecosystem. It is a one-way ticket. When you take possession of those bars outside the system, you have now, in essence, cut off their industrial liquidity. They would need to be reintroduced into the system and reassayed at a considerable time cost and actual physical cost of assaying those bars. So when they leave, they're not coming back. Question is this for delivery on a deal that's already been prearranged with JP Morgan? My inclination is yes, it is, that they will be delivered. They've already arranged that, because typically when we see these big spikes, like, a few weeks ago, we saw it go from over 27 million ounces to well over 30, 34, 35, whatever the number was. And you and I were talking about it at the time, but then it went right back down again. Does that mean that someone took possession of it? Yeah, absolutely it does. And I don't know that it has anything to do with them offering it up for sale or not. I guess we'll have to see how that all plays out. But in terms of what you were talking about SLV shares, the shares that are eligible to be loaned or lent against or naked shorted, that Bob talked about, I found an explanation of that. I'm going to read it to you here. It says, over the past month, JP Morgan Chase has been steadily retracting borrowable shares of SLV to ensure that they have sufficient physical silver on hand to meet delivery obligations for contracts. Oh my gosh, what does that sound like? The delivery obligations for contracts that just ended up in registered? Could that be? Maybe. They only need to transfer the surplus silver acquired from retracting these SLV shares, which they did, to the registered category, which they did a few days prior to delivery, which they are doing, because the first delivery delay, I think, is just in a couple of days here, September 1. So hence, as the delivery date draws near, JP Morgan Chase would make concerted efforts to shift silver into the registered category. And a coincidence, interestingly enough, is that we have been seeing a substantial drawdown off of SLV. This is one of the preferred ways for the commercial banks to do these covert maneuvers that carry much less scrutiny and attention than moving things in and out of registered and eligible do. So yes, I think it is explainable. I personally believe it to be bullish. I don't think that they are dumping this onto the market. I think it's already there's a deal already in place, and this is just going to leave the system. If it leaves registered and leaves and doesn't go into another eligible account inside of COMEX, to me, it becomes exponentially more bullish. I guess we'll have to see over the next few days.
Silver is expected to trade at $24.79 per ounce by the end of this quarter, according to Trading Economics Global Macro Models and Analysts' expectations. What's your take on the recent silver market developments, including JP Morgan's silver transfers? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.